All right, ladies and gentlemen, let's go ahead and throttle up and get airborne. Man, I wish I had delayed this brief a little bit so I could watch the Pete Hegseth confirmation hearings. I'm sure they're going to be awesome. I got a couple buddies in the audience. Going to be some fireworks, especially when you got people like Pocahontas, who who's going to throw as much dirt as she can, right? Going to be interesting. So, hey, welcome to day 2 of our 2025 market look ahead. And the reason I decided to throw these couple days on was because it's changed from December, right? December, I did a welcome aboard brief, or not a welcome board, but a 2025. Hey, here's my strategic outlook, and it's completely changed. What has changed? I'll just give you the cliff notes real quick. Buy this market with both hands. Donald Trump, this was right after the election. I said, hey, rip your face off rally. Everything's great. Trump deal making, tariffs as needed. He's not going to do anything that's going to make the market crash because he's a narcissist and he loves people loving him and he wants the stock market to go up. So all of that stuff is bullish. Deregulation, getting rid of bullshit government agencies that serve no purpose. Jimmy Carter, God rest his soul, came up with the Department of Education. I think when he did that, we were like first in the world in education. Now we're like 37th. Okay, that something's not working, right? And other stupid government agencies as well. So a lot of good stuff to be bullish on. Yeah, and then Jerome Powell, right? I think a week or two after I did that brief, the absolute shit show of that Fed meeting and press conference. You don't deserve another rate cut, but I'll give it to you because you're going to freak out if I don't give it to you. The market freaked out and you gave it to us, Jerome, you idiot. The guy sucks. 50-point basis cut in front of the election. The Fed's awful. So, and we've got blazing hot jobs numbers, and the PPI came in a little light this morning. We'll take a look at that in a couple minutes. But inflation is sticky. Not only has it been sticky, it's gone up the past 3 months in a row. It's forecast on Friday to go up. Now we're going to dig into all this stuff and what it means for trades and stuff like that. But man, I think we got some potential bad stuff coming. Okay, so I'm not buying it with both hands. I'm selectively buying stuff, as we talked about yesterday in our day 1 brief, our solo Amazon brief. If this is your first brief with us this week, welcome aboard. Here's yesterday's replay where we talked about Amazon. We got long-term bullish on Amazon. If you got filled on that trade, it's already looking good. Amazon has a little pop at the open, so did the SPX that sold off a little bit, but there you go. Full percentage pop on Amazon. So we covered Amazon yesterday. If you'd like to join our solo Amazon service, it has nothing to do with what I'm talking about today or tomorrow. They're separate services. It's only $97 a month or $970 for a year. Okay, so let me give you that link. I think that works out to be 2 months free or whatever it works. You get your manuals. Somebody sent me an email last night asking about Options Weapons School. Do not do solo Amazon or what you're going to do today without Options Weapons School. It's just you're jumping in a Hornet without going through flight school. Don't do it. It's $297, folks. There are other places that charge thousands of dollars for their crappy training. I focus on the practical application of it. The training's over here, man. So we talked about that yesterday. So that is one of the things that I would buy with both hands is Amazon. Why? Again, we talked about this yesterday, but when in doubt, run to MA. What's MA? Microsoft, Amazon. Fund managers, hedge fund managers, professional traders, family offices, institutions, they don't pay bonuses to traders on nothing, right? You have to put your capital somewhere. Hedge fund managers don't get paid 2 and 20 to sit in cash. Money has to flow somewhere and be deployed. So even if the market's going to implode this year, maybe, or things are going to get bad, that money has to go somewhere, folks, to be deployed. So when in doubt, run to MA. Microsoft, Amazon, solid names that print cash in any market condition. We're going to talk about another name today that's also potentially recession or bear market proof. As a matter of fact, the worse things get and more people trade, this stock should go even higher. So we'll talk about that in a little bit as well, but just a quick review. I was big cautiously, little bullish. Now I'm bearish for 2025. I don't think we get a single rate cut this year. As a matter of fact, maybe towards the end of next year, or maybe even in the summer, barring a miracle happening and inflation starts coming down to what's it supposed to be? Say it with me, 2%. It's forecasted Friday morning or Thursday morning, whenever it is, to be 2.9. I think we get a rate hike this year. And Jerome Powell, if you're grabbing popcorn for the Pete Hegseth hearing, grab some popcorn for Donald Trump versus Jerome Powell. Yeah, I'm not even going to do it, my imitation. But anyway, tech, financials, we're going to talk about Goldman Sachs today. We're going to talk about defense real quick. And then tomorrow, we're going to talk about some long-term bullish trades in some other areas, but also the psychedelic, the MAHA space, make America healthy again. I forgot I had an appointment up in Palm Beach County, or I'm in Palm Beach County, up in Palm Beach, across from Mar-a-Lago, with the Palm Beach Commissioner and then the Hanley Foundation and a bunch of other heavies. We're trying to get psychedelics decrimmed in Palm Beach County. Could you imagine where the president lives? They decrim psychedelics. I might be going up to Tallahassee the first week in March with the Palm Beach. It's called Palm Beach Days in Tallahassee. It's when all the lawmakers from Palm Beach go to Tallahassee, they trick or treat around everybody and try and get stuff done. So the commissioners invited me to go with them to Tallahassee. We'll see what my schedule looks like to potentially meet with Governor DeSantis on all this stuff. So we'll talk about that tomorrow. Okay. All right. Let's go ahead and do our strategic brief. If you're new to TOPGUN Options, welcome aboard. We do SOT, strategic, operational, and then tactical. Okay, so strategic brief. These headlines make me furious. Ukraine not yet in strong enough position for negotiations. It's almost like at the beginning when Putin and Zelensky had people meeting and said, you know what, let's everybody throttle back, we can figure this out. And then Boris Yeltsin, that human piece of feces, and Joe Biden got to Zelensky and said, no, don't agree to anything. You can win this thing. We'll give you a bunch of weapons and stuff. You can fight them. Yeah, we got your back. 3 years, 4, how many years later? 3, 4? I've lost track of this. It's now World War II length. Not yet strong enough for negotiations. So now Mike Waltz, who just introduced or is speaking for Pete as a recommendation, hit us on the Sunday talk shows with a, we're going to pressure Zelensky to lower the recruiting age to 18. Awesome. Nothing better than 18-year-old kids being given a weapon, really basically untrained, because they're not going to spend a year to train them and go turn them into hair, teeth, and eyeballs. I didn't vote for that shit, Mike or Donald. This is awful. So we're going to throw more human bodies into a meat grinder to try and get us into a better negotiating position. Could you imagine being an 18-year-old? So we know how this is going to end. The lines are probably going to freeze where they are. Russia's keeping Crimea, I guarantee you. There'll be some sort of UN stupidity border force, kind of like in North and South Korea, and they won't be able to join NATO for 20 years, if ever. That's what's going to happen. I told you that's what's going to happen before this thing even started. Why am I ranting about this? Because you have to know what's going on around the globe before you start looking at a trade on the S&P 500. You have got to think strategically, right? One thing I'll cover real quick. I promise you in the next 2 years, Xi Jinping and China will move on Taiwan. Somebody tell me what is going to happen when that happens to the VIX, the volatility index, or the S&P 500. How do I know it's going to be in the next 2 years? Xi Jinping told us. Unlike Democrats and a lot of other stupid people, I listen to what my enemy says. Most Democrats, when they hear Iran say, oh, death to America, you crazy Iranians, we know you're just joking. Okay, when the Iranians scream death to America, death to Israel, I kind of believe them. No, they say they're only making nuclear things for power, not to make a nuclear weapon. That's how stupid these people are. So I listen to my enemies, right? I listened to Xi Jinping 4 years ago. He gave one of his annual speeches in his Mao uniform saying, generals of the People's Army, you will be able to invade and take this renegade province back by 2027. He gave a date. His most recent annual speech said the same thing. Now, is it going to be storming the beaches of Iwo Jima invasion? Well, I just saw a report the other day of these massive barge landing craft that they've made that are UAV, unmanned type of thing. And will it be a full-scale invasion? I don't know. I predict it's going to be Cuba. It will be a blockade. They did this in their largest naval exercise in Chinese history 4 or 5 months ago. They encircled the island with everything and squeezed. Why am I rambling about this? Because your little whatever position in NVIDIA or this or that, you have got to know what's going on around the world strategically because it will impact you tactically. I promise you something will happen with China in the next 2 years. And obviously, don't forget that we were in a trade war with China under the first Trump. So this is something to go on. Dave, good point. Dave said the VIX did nothing when Russia attacked Ukraine. Why? It was known, right? The VIX, delete volatility from the word volatility index, from the term. It's the uncertainty index. When something's known, the VIX doesn't pop. You didn't surprise me with this. Now, one could say, obviously, it's, Xi's been telegraphing this, but Ukraine, love the people and, God bless you type of thing. There's nothing in Ukraine, folks, except chemical weapons labs that we're not allowed to own that the CIA operates. There's grain, cereal. Taiwan, folks, is 70% of the semiconductors on this planet are made in Taiwan. It's a thriving, I call it a country, but a private province. That will impact the world economy. I'm sorry, Ukraine, you just didn't scare the VIX enough. Russia moving into a civil war, and I'll call it that. I know military history. I know a lot of history. That's a civil war. So good point, Dave, but Ukraine ain't Taiwan. Sadly, they don't have enough stuff to really freak the markets out. Okay, let's move on and get operational. But I'm warning you, folks. One more rant here. I have no idea what strategic ambiguity means. When it comes to potential conflict and war, there should be no ambiguity. That's why Trump, love or hate him, there ain't no ambiguity. The guy says, doesn't have a filter. You send another tweet out, Iranian mullah, or you hurt one American, I'll rain fire and fury on your country. The reason that we didn't go to war, that Trump the first time didn't go to war with North Korea, is because he sent a picture of the dear leader from a drone. Like, I'm not gonna, you know what? We're not gonna go to war with North Korea. I'm just gonna kill you. Can you meet in Singapore next week? Yeah, buddy, let's go shake hands. Remember that? Joe Biden, we believe in one China. So Taiwan's part of China. But we're going to sell them tanks, fighter jets, and artillery pieces. What? Yeah, we're gonna arm them so they can fight. Fight who? China? Yeah, but they're part of China. Well, no, we're being strategically ambiguous. What? Do not be strategic ambiguous when it comes to life and death. You're an idiot. So I know what I'm talking about, folks. On the Kitty Hawk or Lincoln, one of my cruises, I did the defense of Taiwan exercises, man. I have no idea what's going on. So PPI, stock market, NASDAQ stocks rise. Tech's been getting hammered lately. After what? The PPI came in a little lighter. What is PPI? Producer Price Index, right? So, and let's just look at the chart. CPI is more important than PPI. Obviously, that was the forecast, that line up there. That was the actual. It's still elevated, right? But other than that, Mrs. Lincoln, how is the play? And remember, whenever you see the word core, it means X something. Excluding, it's a PPI is the change in price of finished goods and services sold by producers. X food and energy, right? Whenever you see the word core, it means X something, all right? So the market is celebrating a little bit this morning, a little bit of a yay, but we'll see. Nobody really cares. I really don't care too much about PPI. It's all CPI to me, or PCE, personal consumption expenditures, right? That's the big attitude indicator for the Fed. John, do I think Hegseth will be confirmed? There isn't a single Democrat, unless the oaf from Pennsylvania supports him. There won't be a single Democrat that will vote to confirm him. So it's Susan Collins from Maine and the idiot Murkowski from Alaska. It comes down to a handful of Republicans who aren't Republicans. So it just, I think it's a coin flip. I think Matt Gaetz was the sacrificial lamb. I think Trump just did that as a FU. One of these nominees had to be the sacrificial lamb, meaning, okay, we lost that one, but the others, you better do or I'm coming after. Okay, so let's continue here. We laughed at this headline yesterday. Investors hope earnings season can revive this faltering stock rally. Hope. Stocks go up on what? Hope. They crash on fear. Well, guess why the market, guess why we have a faltering rally? Fear. You see that massive leg down where we made 250, 300% in a day with a trade right there? That was Jerome Powell. That was the Fed meeting, right? We were all fat, dumb, and happy until Jerome Powell gave us a hawkish cut. One more time, I'm going to remind you, and I will take a victory lap. I've been nailing this, folks. I said I was stunned in September. I'm like, 50 basis point cut? You need to be raising 50 points right now. What are you doing cutting? If anything, don't do anything. No, it's right in front of the election. We want to juice things for Kamala. Well, you probably screwed her more than you know, because that happened. That's when the market woke up to Fed really doesn't know what they're doing. The guy's a coward, and I mean that in the full sense of the word, Jerome Powell. A hawkish cut. We saw the Fed funds futures rate say 98% probability that we're going to cut, and if we don't, the market's really going to freak out. What to do anyway, dude? It's like, Donald Trump. Now we can call him a convicted felon. You've been calling him that for the past year or two, whatever it was. Yay for your little victory. So Jerome, you shouldn't have done any of this stuff. So the market is sobering up from a 2-year rip your face rally. Sam, I appreciate that. Wiz, you have been nailing this for 20 years. I appreciate that. It's not rocket surgery, folks. This is not hard. Common sense, man, which clearly isn't too common. I'm going to remind you, let's just do a little debrief real quick. Look at that monster rally. It started here in December of 2023, where Jerome Powell said, you know what, we might cut some rates next year. I think it's time. Rip your face off rally. When did we get the first rate cut? Here. And then, now we're in trouble. We got the first rate cut in September. So this was all hope. And then now that we've gotten it and we didn't deserve it, the market, the chickens are coming home to roost. Okay. So, yeah, exactly, Scott. Okay. But this is part of the problem here, folks. Global bond tantrum is a wrenching and worrisome start to the new year. Ladies and gentlemen, if investors can start getting 5% essentially risk-free, this market, this rally is in trouble. Okay? Longer dated US bonds have already touched 5%. Uh-oh. With that milestone now seen by many on Wall Street as the new normal for the price of money. Whoa. I'm telling you, folks, I told you yesterday, I'm going to remind you, man, when you have nearly 3,000 hours in this market in a jet, you feel things. There's been a sea change. Am I still underlyingly bullish on Trump? One more time, I'm going to remind you the dude's a narcissist. If the market starts crashing, the guy will literally throw everything at it. He's the first president that, he's on his phone. Stocks are looking good here. I'd be a buyer of stocks. What? Freaking president of the United States tweeting about the stock market. I'm here for it, man. So he will obviously do everything in his power to not let equities crash, but I think it's out of his hands. I'm going to have a big bag of popcorn for the Jerome Powell flamethrower he's going to take to the guy. Somebody should fire that guy. If only the guy that hired him, you could fire him, which he can. Jerome Powell at that one press conference. So will you resign if the president asks you to? No. Next question. What? So it was stunning. No. And then somebody did a follow-up later. Well, he's like, the Fed chief is appointed for 10 years, so I'm staying. You read that wrong, Jerome. The term is no longer than 10 years. It doesn't say anywhere that you must serve for 10 years. It says no more than. And by the way, you work. The Fed isn't some quasi ex-government agency that bankers made up in 19 whatever it was for them to print money out of thin air and to make them richer. You report to somebody, the guy that hired you, you report to. And it does say in the Federal Reserve Act, he can clip you for, essentially whatever he wants to. But anyway, let's get back to this. Hope. I feel that like an Amazon or most companies had a good fourth quarter. It was a good, Amazon, we beat that dead horse yesterday, man. Wow. You're welcome for all the people who had on our burner trades and our bullish double verticals for the Santa Claus rally. You had a great Christmas, Kwanzaa, winter solstice, Hanukkah. Whoosh. I told everybody yesterday, you should have today a calendar reminder. The middle of every November, you should get a calendar reminder for the rest of your life that pops up that says buy Amazon. That's called a Santa Claus rally. Black Friday, Cyber Monday, boom. So I'm not beating the dead solo Amazon dead horse. We already did that yesterday. We put on a long-term bullish trade all the way out into the future. It's 2.5 years out into the future. Just going to sit there as Amazon goes up and to the right. It's going to print money. We also trade the front months. When Amazon was trading sideways over here and in here for a little bit, we did tactics called iron condors. They're range bound. It's a football field. Amazon can run all over the place in there as long as it doesn't step out of bounds. We make money. And obviously, as I just alluded to, we did burner trades and double verticals that physically printed money when this happened. Got the texts, got the emails, got the screenshots from the Max Afterburner group, like, holy shit, dude, my Amazon is printing money. Yeah, it is. So when all you have is a hammer, everything looks like a nail. As the market, as Amazon moves, we shift our tactics, right? Bullish double vertical. Did we do a bear? No, we got bearish in here. I didn't do double verticals. Iron condors in here, right? When after this, what was this? This was Q3 earnings. Oh my God, earnings weren't overly disgustingly filthy. They were just filthy. Oh my God, this is a gift. Sell everything you own and buy Amazon, and you made 40 bucks on it. So we adjust our tactics based on what the market's going to do. But seeing bonds come into life, folks, is a warning sign. This is a canary in the coal mine. There's a link, right? There's a chain to coming to a potential big pullback or a bear market. This is a big link in that chain, folks. Cash, what did I talk about? Cash flows somewhere. If it starts flowing into bonds, where's it leaving? Here. Okay. And that will be bad. The last time, go look, when was it? 2022. Whenever the last time we saw 5, the market imploded. That is a link in the chain. Okay. I'm not going to beat this dead horse because I want to get to trading, but we're gonna hold right steady for now. Why? Well, because of what Donald Trump might do. Wiz, the Fed's apolitical. The guy's not even in office, not even sworn in yet. This was a month ago. And they're blaming what their mistakes currently are on what Trump might do in the future. Cowards, all of them. Unbelievable. So the Fed is not reactive, even when inflation is biting Americans in the ass, but it's proactively hostile towards the president it disagrees with, even if that policy doesn't even exist yet. Isn't this funny? These men and women are hedging. Man, we screwed up big time. We should not have done that September cut. Even the Wall Street Journal took a flamethrower to Jerome, right? The Federal Reserve's premature rate cuts look worse all the time. So you know the Fed's sitting in a briefing room going, yeah, Trump wants to do some trade policies. It's his fault. Okay, all right. So you will start seeing all of these stories as we talked about. We talked about, I think he's getting I do think he's getting a deeply damaged economy. They've been lying to us for years. How many times did you see Sideshow Bob give a press conference? Everything's great. Yeah, everybody's complaining about the price of eggs and this and gas and everything's through the roof. Well, that's false. I'm reading this from the department down the street who 90% of us voted for Joe Biden or donated to Kamala Harris. That's false. What? So the American people are wrong about the economy. The numbers you're reading from the guy down the street are right. Yeah. Okay. Biden's treasury accused of trying to juice the economy pre-election. Yep. All of this stuff is coming home to roost. You're also seeing this. Did you see the senile president give his farewell kind of speech? Everything's great. The economy is the best it's ever been in the history of this republic. The world's in a safer place, and the Americans have never been safer. A radical Islamic dude just plowed into a terrorist attack in New Orleans, 15 Americans. It wasn't a 9/11 attack, thank God. It wasn't 3,000 Americans dead. It was still a terrorist attack, dude, on U.S. soil. War in Ukraine, war in the Middle East, or the Red Sea. Shipping is closed. World shipping is closed in the Red Sea because of fucking dudes in Toyota trucks and flip-flops. And we're doing nothing about it. 2 U.S. Navy SEALs were killed in the Red Sea, the Gulf of Aden. Remember that one? Remember his shit show of a debate? We haven't lost one American on my watch. 13, oh my God, man. 11 soldiers, a Marine, and a Navy corpsman were killed at Abbey Gate. 2 Navy SEALs were killed in the Gulf of Aden. You haven't lost anybody on your watch? My God, you're a horrible person. But my son Bo died in Iraq. No, he didn't. And you're not a Gold Star father. You're a liar. I don't fault somebody for their grief, but I do. Stop it. Anyway, yeah, John, it's an echo chamber. He's surrounded by he's surrounded by a tight group that doesn't let anybody talk to him because they all know that he's nuts. This fund manager forecasted 20% gain last year. He was right. Now he's saying cash is king. Dan Niles says, hey, we're going to see a 20% sell-off in the market if inflation reignites. Hey, Dan, it reignited. Goldman sees financing as the future. It is rearranging itself to reflect that. I love these type of headlines. New group to capitalize on surge in private credit and anticipated boom in private equity deals. What did I tell you? At least under Donald Trump, this stuff is back. Banker luncheons in the Hamptons and the strip club down in Miami is back. M&A, all this type of stuff. So take the Fed out of things and them screwing up inflation and everything being bad, you get a rip your face off rally for the next 4 years. I guarantee you. But we're not in a vacuum right now, folks. I can't do that. And if you're new to Top Gun Options, let me tell you something. March of 2020. So you're looking at one of the only guys on the planet that nailed the COVID crash. Why? I had a buddy in the White House. In December of 19, dude, something escaped from a level 4 lab in Wuhan, China. The only level, they have a chemical weapons, biological facility. They're digging up the highways around the city. They're building mobile crematoriums. It got out. What happened to me? I put that on Facebook, Twitter, and YouTube, and I lost all those accounts. Really don't care because I made people millionaires. In a span of a couple weeks, I made $2.5 million, including when Donald Trump tweeted, I'd be a buyer of stocks here. They look good. The next day, the Dow went down 3,000 points. I made 75 grand at the open with S&P 500. So why did I bring that up? I forget. Anyway, so we're going to talk about dogfighting the market. That's just, you can put that on my tombstone, man. We nailed it. Oh, that's what I'm getting at is during the height of the COVID crash, I literally went over to that massive bookshelf and I put in a blue recycling bin out at the end of the driveway about 30 books on investing. It's over with. This is not your father and mother stock market. This is not, I'm going to look at the fund, good on the Berkshire Hathaway dude, the Oracle of Omaha, looking at cash and PE, whatever, dude. It's the Federal Reserve. I look at fundamentals. I look at volatility. I look at technical analysis. Since the March bottom, when Jerome Powell came in and dropped the biggest financial nuclear weapon known to man, none of that has mattered. It doesn't matter if Donald Trump has deal making and cuts regulations and everything like that. It's the Fed. It's inflation. Not, Dan Niles, if inflation reignites, we're going to see a bear market. It has reignited, Dan. I feel like, what's his name in Die Hard? Welcome to the party, pal. I'm not going to say we're early on things. We're right. We're right on time. It just takes people a while, institutions, to wake up for this. You are a single seat trader. You're a single seat fighter pilot. When I was at my firm in Chicago, all right, we're going to order in lunch. All phase heads we're going to do lunch in the boardroom. We're going to talk it. Watch Billions, folks. Even though Axe from Axe Capital was the guy, if you have 100,000 shares of Apple, you're not dumping them into the market right now because then the price, it takes a while for things to get into the zeitgeist. Us, in the blink of an eye, I can get out of position and into a new one, right? You're single seat. You can pull on the stick and pull 7, 8, 9 Gs in the blink of an eye. Most institutions where Dan Niles is, we're going to meet and decide the investment committee, folks, they are a super tanker doing 30 knots. Let's make a course change. It's the state of Texas is the radius of that turn. So, all right, here we go. Now, let's just do some brief technical analysis. Where's 5850? Right where we are. I told you this last week. So we put on a bearish double vertical, right? I got out of it over here. If you were still into it, I told you to get out of it yesterday because we were going to see a snapback rally up to what? 5850. Look at where we are right now. Look at the S&P 500. What are we doing? Let me go look. Let me go show you what the S&P 500 is doing. It is a heart rate monitor right now. Okay. Heart rate monitor. We went, and if you notice, all these lines on my chart are where? At $25 increments. The S&P 500, SPX, moves in 20. These are magnets. Every one of those white lines is a $25 increment. Up or down, look at this. Up almost to 75, back to 50. Now we're having lower oscillations. This is the battle of 5850 right now. Why? because of this. I drew this last week as well. There is a descending triangle. That is very, very bearish. If I had my old graph paper and everything like that, I'd make it perfect. But this can't go on forever. It gets, you either break out up or you break out down. And what did I tell my members last week? We're going to break out down, and we have. Today, yesterday a little, and today we have what is called a snapback rally, back up to that technical 58.50 level, okay? Men lie, trades don't. Let's go look at last week's primary live trade brief. This is what the member area looks like. Pull up the member area. At the top is where you join today's brief, the primary live trade brief. Here's the link to join tomorrow's accelerated retirement. Right here, and let me show you the last couple of them. Ready for this? And there's an example of me doing an iron condor, right? When I said Amazon was kind of range bound, there you go right there. New Amazon weekly iron condor. That one went right through the uprights. Look at this. Dog fighting the SPX. We were in a bullish double vertical that we exited. And then what did I say last week? We rolled inverted and got a bearish double vertical on. And what happened? I just showed you the S&P 500 chart. We imploded. You're welcome. Men lie, trades don't. There, everything is written right there. You just click on it. At the top of the replay pages, there's the video. You just click on it to watch it if you missed the brief. And then there was last week's bearish double vertical. That if you held it until yesterday, it was like a 375%, 350-ish percent return in a week. Okay. And this was on limited risk, folks. Look at the risk in the, if you did one contract last week in this trade, you risked 675. That was the most you could have lost in that trade. If you held it, you saw $2,300 in profit. The risk to reward was 1 to 3.44. So risking 675, you made over $2,000. You made $2,300 in a week. Actually, it wasn't a week. It was probably in a couple days. Okay. So again, men lie, trades don't. There was the trade from last week. Okay. Let's go back to our group. I'm vaping a little bit or vamping. Why? Because I'm watching for this. I wanted to see if we held 58.50 and we're not. We're breaking down. So that's going to impact what I'm going to tell, what we're going to talk about. There's my beautiful family. All right, here we go. So let's go ahead and go back to this chart right here. I think, and I believe, which is, I guess, me saying I think, let me grab my pen again. Let me just draw this 58.50 descending triangle. We've already broken out. If we fail here today, and we got CPI coming up, I'll go look at that again. I think we're going to go test this. I'm going to talk about World War I trench warfare for a second. What? Came to a trade brief and we're going to talk about this. Yeah, because do you see these moving averages? In between moving averages, folks, is nothing. This is World War I trench warfare. It's no man's land. The market doesn't like hanging out in here. It doesn't. Why? Because it's uncertain. These moving averages act as what? Magnets. Look at this. We have violent moves down to them or back up to the next one. Right now, the market is not digging being under one or not touching this one. I've been in the rooms, folks, with the Ukrainians, Chinese dudes that write this code and program the auto trading. Humans, traders, also don't like the uncertainty of being in the no man's land. Right now, and you can see it, look, because we kept getting pulled back up to the 20. And then now we're definitely in no man's land. We are literally in between the 50 and the 150. Market don't like that. If we get hot on, when is it, Friday? Thursday? It's tomorrow, sorry. If we get hot, which it's forecast to be hot, the market's going to be furious. But here's the issue. If it comes in line, 2.9, does the market say, yay, it came in as forecast? Or does the market go, holy shit, boo? I think it says, holy shit, boo. Look at this. One more time, let's review. Donald Trump inflation, Donald Trump peaked 2.5%. Joe Biden. Oh, wait, it came down. We're going to take credit for it. Did you take credit for it going up? No, it was Trump's fault. Oh, okay. But it came down because of everything we did. Now it's sticky. It's bottomed out where it topped out under Trump. And the last 3 months, it's gone up. Okay. So my call sign's Wiz. It's not Nostradamus. I have no clue how the market's going to react to CPI, to be honest with you. This is why we can have dueling trades on. We can have it's called dog fighting the S&P 500. Okay. So, and we're going to go far enough out in time to cover both priorities. What do I mean by dog fighting the S&P 500? Well, I think this is going to, somebody, you know what? That's a good question. Who asked that? I'll cover that right now. Rick. And Jeff just asked too, the 150-day. Folks, why don't I have a 200-day moving average up right now? Because the market hasn't touched that in ages. Hello? This is why. And let me open the chart up. Folks, I used to be a 200-day moving average guy. In this 2-year rip your face off rally, let's go look. When have we touched the 200? We haven't, right? This is the Jerome Powell, I'm going to cut rates this year. Do you know what that line is right there where we touched? The 150. We haven't seen a pullback. This was the old days, folks, of volatility and shit shows, and I loved it. Jerome Powell, we're going to cut rates. So now let me show you the 150. Oh, okay, Wiz, I'm right. If we are going to get a pullback, it's right there. That's the next support would be 150. Yeah, so Rick's been here for a while. You know, for years, Rick, it's been a 50, 20-day, 50-day, and the 200-day moving average I'd have up. Makes no sense to, because we haven't hit that. If we don't stay, if we do pull back to the 150 and things are getting uglier, you got it. We will. It's going to be bad. My volume is low. Can anybody hear me? Somebody just said my volume is low. I'm pretty sure I speak loud, but all right, let's get going. Because I'm going long here. I want to show all the new people that I drone on for hours. I'd rather get my teeth drilled. I am actually getting my teeth drilled at noon, so that's why I can't stay long. So here we go. Great volume, you're golden, loud enough, volume is fine, 5x5. So Sam, turn your speakers up. All right, here we go. Let's at least show the first dogfight I'm going to do. I think we need to get a washout. I feel it, okay? But then I think inauguration, first 100 days, the first day in office, Trump has already said, I have 100 executive orders on my desk. Think the market could turn around and go, okay, this guy's not messing around. Things are going to be good, at least for a little bit. So let's do both. I'm going to do one today. I'll probably do the second one tomorrow for the sake of time. I think we're going to get washed out. And if we're going to get washed out, it's going to be sooner rather than later, next couple weeks. Let's call it 2 weeks. If we're going to wash out, it's going to be next 2 weeks. Let's go out to that Friday. What is it? The 31st. I'm going to give this trade 2.5 weeks to work. I'm going to do a bearish double vertical out to the 28th. What is a bearish double vertical? It's two vertical spreads on top of each other with the same strategic mindset. If you're new to options, don't worry about it. You're going to get access to the Options Weapon School you're going to learn all this stuff. I think the double vertical brief is an hour. This will take me 5 minutes to do. That's why when you join, you do you go watch all your weapons school stuff. Okay. Now, why am I rambling about that? Because if you don't know anything about options or you're just basic options, you'd be what? Well, I'm going to go buy a put. Buying a put is stupid. That's a waste of money unless you know absolutely certain 100% Wiz, not 99.9. I am 100% certain. Then go buy some puts. Nobody knows with 100% certainty that something's going to go down, and buying a put is a waste of money. You should sell another put against that to make, to help offset that cost. Now, let me just, we'll stay here because I want to see if you can hang on. If you think, Wiz, I think you're right. This is a magnet. That 150-day is calling. The market is in no man's land. I get the World War I trench warfare analogy. I got you. If you think the market, the S&P 500 in this case, is going to go down, what do you also believe at the exact same time? I think the market's going to go down. What do you also believe? Let's all say it together. I think the market's going to go down, comma, which means it's what? It's also not going to go up. In that sentence I just gave you, ladies and gentlemen, in that entire sentence, exactly, is two trades. I think it's going to go down, comma, it ain't going to go up. The I think it's going to go down is a trade. I don't think it's going to go up is another trade. And I didn't cover this for the sake of time, but we have a trade plan. It's a 7-step trade plan. I'm kind of going through it right now. I'm not numbering the steps, but that is your commit criteria. Step 3 of our trade plan, which you'll get access to, is why am I committing capital to this trade? I just gave it to you. Now, kind of like I did yesterday, let's go out to Jan 28 and let's take a look at the options pricing. That's 14 days away. Right now, the market is at, shockingly, 58.50. What did I tell you? This is the battle of 58.50. Look at that. Boing, 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 right there. So 58.50, let's see if E-Trade doesn't screw me today. I'm going to look at something called the at the money straddle for January 28th. Don't wish your life away, Wiz. 28. There we go. It's $139, double that. So the options market, you see this Pocahontas tent right here? Let me write these down. The options market is pricing in a move below. You see the green, you see the TP right there? That's what not me, the options market. The pricing right now is saying it's going to stay below 59.95, and it'll stay above 57, I'm going to round up, 25. One more time, if you don't understand this, don't worry. You're going to learn this. Did I pick the wrong day? Oh, 31st, I'm sorry. Yeah, it's probably pretty close. You're right, the 31st. Let's delete that. Let's go to the 31st. Thank you. Good mutual support. Actually, it's obviously wider. 6,000, and I'll just do 6,000 to the top because I do the 25 increments, and 5,700 to the bottom. So it moved. Yeah. Okay. Thank you. Mutual support. Now let's pull up the options chain for the 31st. Okay. Here we go. Let's go ahead and that's a great point, Mark. Thank you for the mutual support. Guess what happens on the 29th? What happens on the 29th, folks? Type 3 letters right now. You got it, Frank. You got it, Mark. Fed. The next Fed meeting where Jerome gets a microphone is the 29th. What do you think Jerome Powell's going to say? We're making great progress on inflation. Things are great. Here's another rate cut. Or I think the outlook is cloudy. Folks, what happened between him saying, here's a rate cut, but you're probably not going to get any more? What happened between then and this one? A blistering jobs number. Thank you for adding to my commit criteria for a bearish double vertical. I would be, could he be a dove on the 29th, folks? Of course, anything can happen in God's universe. Will he? No. I guarantee you that dude brings a little bit of heat. He's also going to bring a little bit of a heat because he doesn't like Donald Trump. I thought he's apolitical. Never a word from Jerome Powell in the past 4 years about rampant, disgusting spending, blowout spending. Not a word. Donald Trump gets elected, not even in office. Well, we see some potential badness coming under Trump, so we're on call for that stuff. What? Here we go. Let's start building. 6,000. I'm going to go up to 6,000. That's where the at the money straddle said the market most likely ain't going to go above 6,000. Okay. Feel like I'm entering my age on a whatchamacallit, on a website. I got to scroll, baby, like the Price is Right wheel. $1.20. You ready for this? Let's build this trade together. Let's sell a single Jan 31 fixed 6,000 call. That's me saying I don't think the S&P 500 is going to go above 6,000 by January 31st. Okay. Well, Wiz, what if you're wrong? Rarely happens, but I'm going to buy an upside call, the 6,005. $5 wide strikes. Okay. Let's try and get $1.30. Before I go any further, you need to take out a pen and a piece of paper and write down 260. Do it right now. What? Why? That is where you would maybe eject out of this trade to avoid further loss. I'm bringing in a credit of $1.30. I want that full $1.30, baby. What happens if the S&P starts going up? It's going to increase in $1.40, $1.90, $2. Whoa, what's going on here? When I write down on my trade plan 260, if the S&P keeps going up to 260, that's when I take off my oxygen mask, I scratch my chin, and I go, should I eject out of this trade? I don't want to take a max loss decision point. I haven't even placed this trade, folks, and I know when I'm potentially getting out of it to avoid further loss. I don't send out alerts like, hey, eject out of this trade. I actually do. But what I'm saying is we haven't even placed the trade yet, and I know when I'm getting out, potentially. Why do I say potentially? Because right now in this brief, I'm projecting my thoughts forward in space and time. I don't know why the S&P might go up in the future, but I have a point. I have a warning light in my cockpit that flashes at 260 that says, hey man, something's going on with the S&P 500. Do you want to get out of this trade or do you want to stay in? That's when I, as the tick, the trader in command, I sign for my jet. I sign for my portfolio. I don't sign for yours. I don't fly and fight yours. I fight mine. That's when I make the decision. All right. So $1.30, I'm going to take a screenshot of this so I can put it out in the app. Everybody gets the alert. I'm just doing one contract for now, and then I'll show you what I potentially do with the $100,000 mono portfolio. SPX, today's date, 1/14. Okay. Let me show you the risk of this trade. The max potential loss in this trade is 370. Okay. Why did I look there first, Wiz? Why don't you look at the profit? Don't ever in your life look at profit first. How stupid can you be? Do you want to lose 370 bucks? No. Then why would you look at the profit and go, yeah, I want to make that? If you're not okay with this, who cares what the max profit is? You, as the tick, the trader in command, you need to put a check mark there. Wiz, I understand that's the max loss in the trade. Great. Now you can go up there and look at max potential profit. Okay, 130 bucks. Ladies and gentlemen, using at the money volatility in the S&P 500 options, as I just said the word at the money, and it just changed again, as I said at the money, there's a 76% probability of making the max profit. That's pretty damn high. Yeah, it's pretty good. I love this trade. It's a 1 to 0.35 risk to reward ratio. Let's look at the picture over here, the P&L diagram. You see that dotted line? That's the current price of the S&P 500. We make money in a bear call spread. That's the name of this tactic 3 out of 4 ways. What's the first way? S&P goes down. Yay, we make money. The S&P doesn't move. It hangs out for the next 2 weeks. You make money. Okay, what's the third way? Folks, the S&P can even go up a little bit until that point right there. What's that point called, Wiz? It's called the break even. Kind of a no smile, no frowny face. There's the break even point. So 3 out of 4 ways we make money. What's the one way in 4 we lose money? The S&P 500, Wiz, you were completely wrong. Happy days are here again. Rip your face off rally. Okay. Well, I promise you, I will not take a max loss in this trade because I already wrote down my maybe eject point. Now, we talked about the bad, maybe ejecting at 260. Let's talk about the good, right? 7, 8, 9. Oops, sorry about that. I was frozen on the screen. Sorry. I'm like, what's everybody chatting about? Max potential loss is right there, 370, right? There's the max potential profit. And here's I was drawing real quick. It can go down. It can stay where it is. It can go up as long as it stays below the break even. Sorry about that. Screen was frozen. Okay. Now, 7, 8, 9. Why 6 afraid of 7? Because 7, 8, 9. I think my kids told me that joke every year when they were a kid. 7, 8, 9. If you're looking at a 70, 80, or 90% profit on the credit you took in, close it. No one has gone broke taking a profit. I promise you, if you try and squeeze 100% profit out of this trade, it'll probably work out for you. But the one time it doesn't, it will destroy you. I did this as a young guy. I'm looking at a 90% profit in this trade and it expires in a couple days. I want the extra 20 bucks. I'm going to go play golf. Breaking news, Jesus just returned to Earth and he's now the president of the US. And the S&P 500, I have turned 70, 80, 90% winning trades into 100% losers. I've done it. Thank God it was a long time ago and I don't do that. We haven't even placed this trade yet, and we know when we're maybe getting out for minimum loss, and we know when we're getting out for profit. Haven't placed it, we know it. Does everybody understand what I'm talking about? This tactic is called a credit spread. It's also called a bear call spread. So the S&P just failed at 58.50 as I told you it would do. So let's try and get like $1.40 for this trade. $1.40 would be risking 360 to make 140. Let me put the chart in the background. You see what's going on? I told you we failed at, and this, look at the trend, folks. You see it? The trend is your friend. So try for $1.40. I know it's showing $1.25. And now it's updating. Let me grab new screenshots. I like $1.30. So let's try $1.30 plus or minus 10 cents. The highest I'd go is $1.40. The lowest I'd go is, down to $1.20. All right, so I'm going to replace that screenshot. Let me show you the metrics. Yeah, you're welcome. I haven't even placed the trade yet, and I know when I'm getting out. This takes the emotion out of trading, folks. Hey, I'm in this trade and it's up this much. When are you closing it? I don't know. There might be more to go. What? Get out of it. You should know before you place any trade when you are exiting. Okay. All right. So, Greg, I don't understand when you say S&P goes over 260, it's already at 582. No, Greg, I'm not talking about the S&P 500. I'm talking about this credit. It was at $1.30 when I said that. I said double that. That's 260, not the S&P. It's the credit in the trade. Not talking about the S&P at all. I am talking about getting filled on the price of this trade. You double the credit you take in, and that's when you would maybe eject. That's what I was talking about. Do you understand it now? Now, the trade, unfortunately, look at this, is running away from me because that's happening. So we might have to roll the spreads down a little bit. It's running away from us. Shit. Let's do this one. Update. It's the S&P is imploding. 59.75, 59.80. Damn it. Now, if you placed a trade and didn't listen to me meander the whole time, you've already made 30 cents because the S&P is imploding. So I'm going down by 25 bucks. It's running away from me. I love doing live trade briefs. Let me update this trade. And we gotta move, man, because things are moving. Damn it. I'm pretty good at this shit, folks. Trust me. And then I'm gonna fire this trade right now because, all right. Let me grab a screenshot and get filled. I'm not even gonna do the bear put spread yet because I wanna get filled on this trade. SPX. Damn, there goes. All right. Damn it. Come on, get me filled at $1.50. I'm shooting for $1.50. There goes the SPX. See, I'm pretty good at this stuff, folks. If I had most of the TGO members know when I'm rambling through something, they usually get in that pretty quickly. New SPX bear call spread legging into bearish double vertical. At everyone, so everybody gets the alert. If you're a freebie, you're not getting an alert. No offense. It ain't free. Desktop, SPX, upload the other trade. So again, if you're not here, you're in Death My Meeting, you just got an alert right there. Cat. There you go, Bob got filled. Yeah. Joe, using SPX, how about SPY? I'm going to answer that question in a second. I do not trade SPY, and I'm going to tell you, don't let me go without you telling. Fuck, I'm going long. Potential new members, I don't go this long, man, but we're in a free week. New SPX bear call spread legging into double vertical. Stand by for bear put spread. This is my lifetime group. They'll get this, this trade. The hunters got it, and the alert just went out. My phone just dinged. There's the app. You got an instant alert. There, look at that, the S&P 500. I love this shit, man. Boom, what did I tell you? Where is it going to? 58.25, the next stop. Did I get filled? And of course I didn't get filled. Come on, man. All right, there we go, filled. Now, let's build the other trade. What was the strike? 5,700. Let's go look at the chart, what that is, 5,700. Wow, the bottom of that straddle for that week is here. It's literally at the 150-day moving average. So let's go build the bear put spread right now. Okay. Dennis, you got the $1.50. I did, man. Boom, look at that candle down to 58.25. So if you did the original trade as I was rambling through it the whole time, look at the S&P 500. Whoa. Damn it. It's all right. It's all good. I just showed you the power of what I do in live trade briefs. I started talking about this trade here. If you got filled at the original one I was talking about, you're up about 70 cents. You made 50% in 10 minutes. You're welcome. There we go. Look out below. Let's get the bear put spread on. 5,700 was the bottom, right? Look at this. We're in a live trade brief and I'm showing you how you can print money. Is this hard? Now, if you're brand new to options, you might be sitting here going, I have no idea what the hell this guy's talking about. I'm here to train you. Let's sell the lower strike put. What's that? 56.75. 56.75. Okay, now let me step through this, okay? I just did a bear call spread. I put a roof on the market. The S&P is not going to go above this. The tactic was called a bear call spread. It's also called what? A credit spread. I got paid to do that trade, 100 and whatever it was, 150 bucks. Okay? Now I'm going to take that credit and some of it, I'm going to go buy a bear put spread. I'm bearish, I'm going to use puts, and it's a spread. Here's the trade. I'm going to buy one Jan 31 5700 put. Why 5700? I told you that was the bottom of the at the money straddle. And also, see, look at this. We're looking at volatility. We're looking at technicals too. 5700 is where? It's that 150 day that if we get a washout, it's going to go down to that. Okay. So I looked at the pricing of the option and also the chart. So I'm buying that put, and then I'm going to sell that lower strike put $25 wide. I told you it moves in 25 increments, and I'm going to come out of pocket 520 to do it. But I'm not coming out of pocket 520 to do it because I just brought in 150 bucks in the other trade. So I'm coming out of pocket what, 300 bucks? So we're coming out of pocket 300 bucks, and this trade is also serving as a hedge to protect my longs. We're running out of time, but I got long-term positions in Amazon, the SIBO, some psychedelics, some other stuff. So not only is it serving as a hedge, these two trades, to help protect my portfolio, it's doing what? It's called a trade. It's a trade that's going to make money. It's already making money. If you did the initial bear call spread I was rambling through, you made 70 cents so far. You made 50% on that trade. Okay, so now this is a debit spread. We got to come out of pocket a little bit, not as much because we just got paid to do one, but let's go look at the metrics. This trade risks 520 to potentially make 2,000 bucks. Very similar to the other trades I've been doing. So let me grab screenshots of this trade. You're welcome. I'm going to grab a screenshot of that comment. Thank you. First free brief I've been to where I've made money. Thank you, Todd. I wake up in the morning, I piss excellence. I'm Ricky Bobby. I love seeing stuff like that, man. Other places suck. They charge me for the week of access. All right, let me go get this alert. So I'm legging, it's called legging into. I'm legging into a bearish double vertical. Let me try and get filled on this trade. So wait, well, I'm going to place the order. It's a debit, folks. So you're probably going to have to come up closer to the ask, but I'll just start mid-market and try and get filled. There, I fired it. If I don't get filled, I'm going to have to walk the price on up a little bit. Hunters, you know what? I'll just add it to this one. Edit post. I'll add the images to the bear put spread. That one and that one. Okay. So there you go. And then our lifetime folks, they're in the hunters. So technically I don't at everyone in here because they just got the alert because they're all lifetime members are in everything. Edit post. Add image. Right there. And right there. Now, I'm going to get going in a couple minutes, but I'm going to show you something because I'm getting ready to sit here and shoot some snipers on the S&P 500. I'm going to make some nice, I don't drink anymore, but some nice drinking money. Look at what we did. We bounced off of what? A 25. This isn't hard, folks. I'm going to teach you how to do all this stuff. I want to get filled on this because I want to show you what the result, there it is. Look at that, perfect timing. Thank you, God. Let me show you what the full trade looks like. And I'm going to go post that on the, so right now it's showing up as two individual spreads down here. I'm going to group them together. Watch. This, this, and this. Now, where's that trade? Let me show you the final solution, the final, don't like saying that. Not grouping, it's analyze. Where is it? Group analyze, duh. Here we go. This is the full trade. Let me grab a screenshot to show the full trade, just so you can have it in one place. You're welcome. Thank you. I appreciate that. Folks, yeah, whatever. SPX DV, double vertical. Let me show you the picture of it, right? And the full risk. Here's the full trade, folks. I am risking $860 to potentially make 2,100. But look at the picture. Now, does it make sense? There's the roof, the bear call spread, and there's the bear put spread. Double vertical. It's simply two vertical spreads on top of each other with the same strategic mindset, okay? Risking 860 to make 2,000 bucks. That's a great risk to reward ratio, 1 to 2.9. Okay. Did I grab a screenshot of this one? No. Let me grab a screenshot of this. SPX DV. Man, I had to cover the SIBO. We got a lot of stuff to do, but I'm ripping against time here. Awesome, Scott. Great. Pam, I do $5 spreads for the credit and 25 for the debit. I explain that in the double vertical training, folks. So, please, well, let me do this right now since I'm wrapping up. For everybody, this is the replay page. If you joined late, let me give you the replay page. The replay for this will be posted whenever it's rendered, I don't know, 20, 30 minutes from now. Here's the replay page. But for everybody who's new, it's time for you to join. So yesterday I did solo Amazon. It's a separate service. It's not part of what I'm doing today or tomorrow. This is called full throttle. So yesterday was solo Amazon. Today and tomorrow is what's called full throttle. Let me give you the link to join. Okay. And let me tell you what you get. So the first thing you're going to get, if you do an annual or a hunter's monthly, let me show you what you're going to get. Access to what I've been showing you. Let's go back to the hunters. You get access to this investment club called the Hunters right here. You're going to get access to the app and you're going to get those instantaneous alerts right now. This is called the Hunters. It's a private group. We got 259 members in here right now. We have 2 threads, Intel and commentary. This is where I post and other people post. You ready for it? Our intelligence and the commentary. This is the thing on Goldman Sachs. This is the December jobs. This is where I post all stuff, right? Other people post their stuff in here too, right? Psychedelics, HR. This is external investments right down here. The Healing Realty Trust, the investor deck. I posted this last week for all the investors, blah, blah, blah. Then we also have just a trade alert thread. Man, if you're not interested in all the chatter of the Intel and commentary, ignore it. This is where I post just the trades. Okay, so you will get access to this. You will get access to the accelerated retirement brief that we do every Wednesday. That's tomorrow, and the primary brief, right? You also, it's included, get the options weapons school. So if you did solo yesterday but didn't take the training and you're doing this, you'll get it over here. If you just did solo yesterday and you didn't take the training and you're not doing full throttle, you don't get the training because you're not paying for it, okay? So full throttle is the way to go, folks. You get access to the Tuesday brief today, the AR brief tomorrow, and if you do the annual or the monthly hunters, you get access to that hunters, okay? So let me scroll down and I just told you all of that, but let me just show you the different pricing, okay? So I just told you that in the past 2.5, 3 months since the market got really volatile, we have made $100,000 in double vertical trades. $100,000. It was just north of that. It's like 102.5. 102.5. That was a radio station, I think, in Atlantic City. It was about 102.5, 103. trading double verticals on limited risk. Okay. So why am I saying that? Because the annual membership, you save 50% technically, is $29.95 for full throttle. That's a gift. There were people, I can go into my testimonials and case studies folder and show you text and emails and posts from people in the hunters like, dude, my Amazon double verticals up $8,000. Merry Christmas, Wiz. I'm not going to guarantee it, but I can pretty much pay that annual membership off pretty damn quickly. Okay. You know what, Wiz? I want to try out that Hunters, the app and everything like that, but I also want all the full throttle live trade briefs. It's $4.97 a month. This is to test. This is, I think you're pretty good, but let me try a couple months to see if you're not a complete idiot. Do the $4.97 a month. Don't do that. Or as a business owner, I will tell you to do that forever. As a good dude, I'm going to tell you, don't do that. Do that for a couple months and then upgrade. Once you figure out I'm not a complete idiot, shoot us an email and say, no, I'm going to do the annual. Okay. So this one and this one get you access to that Hunters, to the app, to the Hunters, and full throttle. If you're like, you know what, dude, I don't know, man, I'm still want to kind of check you out. It's $2.95 a month. That's a good bottle of wine. You do not get access to the Hunters. You don't get access to the app with the investment club. Why? Because you're not paying for it. I'm not California, folks. So if you want the Hunters, the majority of TGO members are in here. I'd say 80–90% of our membership is full throttle annual max. Okay. And I just showed you with one trade on the S&P 500, 2 weeks out, you could potentially pay for that. You're done. It's out of the way and the rest is profit. Okay. Let me answer some questions and then I got to get going, baby. Mark, I just answered that. No. Does the full throttle monthly include trade alerts via the app? No. Annual? Yes. Hunters? Yes. $2.95? No. Now, Mark, you do get an email alert. When I get done rambling here, I'm going to close the brief, get some more coffee, and I'm going to type up an email and blast it out with the trade. So it's probably delayed however long it's been, 10, 20 minutes. Okay. Oh, yeah. Who asked that? Joe. So ladies and gentlemen, listen to me. And you ready for this? I'm going to pay for your annual membership right now with this with this tip. I'm not going to call it advice because I don't give investment advice. Do not trade an ETF that has an index. So SPY is an ETF. A bunch of you have been asking me, I'm not ignoring you. Thank you, Joe, for reminding me. Do not trade SPY when you can trade SPX. Why? Two massive things. The first thing, and I will get this out of the way right now, I'm not an accountant. I'm not your tax attorney. I don't play one on TV. However, I and everybody else who trades SPX gets better tax treatment if you trade the index over the ETF. I've gotten emails from members that are like, dude, when I went back and looked at how much I lost because of that, I'm furious at myself, but you actually have saved me a shitload of money ever since I learned that. If you have a question on that, Google it, call your broker. I'm going to leave it at that. You get better tax treatment. One more time, sit up straight. If you've been trading SPY for years, I just saved your life. There is better tax treatment with trading an index over an ETF. You're welcome. That was the price of admission. It was paid right there. Actually, you got in here for free. Can you believe that? Do you understand that? You have that. Thank you, Bob. Bob just posted it. Capital gain versus ordinary income. Thank you, Joe. Or I'm sorry, Bob. Joe, I will give you that right now. Because Joe just asked, hey, what if I just want the options weapon school? Yes, you can buy just the basic training right here. It's $287 a month. Yes, 297, sorry. So for anybody who's like, you know what, I'm not ready yet, I just want to take all the options training, it's right there. So Joe, I just pasted that in the chat box. Options Weapon School is 297 a month. Now, back to the SPX real quick. Those options that I just got filled on, the S&P 500, they settle in cash. Meaning you can never be assigned shares, which can be a bad thing, like we talked about yesterday with our solo Amazon. If those short calls that we sold yesterday against Amazon go in the money and you forget to do something with to close them, you will wake up assigned shares Saturday morning. Might be potentially a bad thing. So when you trade an index, it settles in cash. That's why sometimes I let my S&P 500 trades on the SPX go. I run zero risk of assignment. That is huge. I am so glad you guys are asking this stuff because this is value add that I forget about sometimes. It's like breathing to me. But for a lot of you, do not trade SPY ever again. You're losing money. Some of you, a significant amount of money. Some of you, enough money to pay for that annual membership. Thank you, Joe. I appreciate that. Okay. Sam, Wiz, what if tomorrow the SPX rallies? The SPX could rally tomorrow. It could go down. I have no idea. So the SPX trade will have a loss. Yeah. It's got 2 weeks to work, Sam. Right? That's why we put it on a couple weeks out into the future. Okay. Does that make sense? So Sam, what I'm going to do tomorrow, this is called dogfighting, the S&P 500. I have one on that's going to make money if this happens. Guess what I'm most likely going to do tomorrow in the Accelerator Retirement Brief? And all these ads are out here in the white space. Pretend they're not there. I'm going to put on one further out in time, an S&P 500 trade that's going to make money when, not if, the SPX goes up. Sam, I can have dueling trades on. It's called dogfighting. I close one when it makes money and I got the other one ready to go for when it reverses. That's called dogfighting the S&P 500. Mark, good question. Let me show you. He asked, hey, what would you do for the $100,000 model portfolio? And I would do 5 contracts of the bear call spread and about 3 of the bear put spread. It's called a ratio spread. I don't want to confuse people and I got to get going because I literally have to get my teeth rolled. That's called a ratio spread. Remind me, come tomorrow and remind me and I'll do it tomorrow. I'll show you how to do that. Before I leave and after I close the brief, because you're getting way too much for free, I'm most likely going to do a bull put spread for today because that is a solid bounce off a 25 point. I might do a quick sniper shot and make maybe $1,000 or something like that. But I'm not going to do it for you because you've gotten too much for free. I'm going to go do it for my hunters and the Max Afterburner lifetime members. You got it, Kevin. We make theta on those credit spreads. But yeah, let me cover the 100 grand profile tomorrow. One more time, folks. There's the replay page. This replay will be posted shortly. And then I just briefed you on full throttle. The majority of our members are in full throttle and they are annual members. It just makes math sense to do the annual. If you want to kick the tires a little bit more, you do the $295 monthly, but you do not get access to the hunters. You got to be in an annual or the month-to-month hunters to get access to that. Okay, you got it, Joe. I'm a good guy. I'm a fungus. I'm a fun guy, right? How's it going with Pete? Anybody have that on in the background? Has he started getting ripped apart yet? All right, good stuff. I got to go. Again, hour and a half, man. I don't do this. I live. I do my stuff. I do not sit here for 8 hours a day, man. Absolutely not. I live a life. Go fly a jet, go to the beach, gonna go hit the gym here in a little bit. I don't trade, man. I shoot a couple and then I'm done. And we print money as we're doing it. Okay. All right, guys. I appreciate that, Rob. It sucks. Flyers suck. Have a great rest of your day. Happy hunting. Make sure you're hedged. We are hedged. Look at that. I just showed you a hedge, man. This trade prints money if the market implodes. Kind of on thin ice right now, folks. I'll show you tomorrow how to go in the opposite direction, okay? Fights on, namaste, and basi. Basi means truth in Bawiti, and the truth will set you free. I am the way, the light, and the truth. God bless. Fights on. See you.